So in the area called as value at risk, there are some good amount of questions. So let us try to solve those questions on one-on-one basis, complete them such that we will be perfect in understanding the concept of value at risk. Okay, let us solve. Let's read the question first. Portfolio value 100 crores, daily VaR 2%, sorry, daily standard deviation, I'm very sorry, daily standard deviation 2%. Calculate the VaR at 95% confidence level. Z value they have only given how much? 1.645. 1.645. Okay, sir, 1.645 is the value they have given. Yes. Okay, now question, how they would have got this particular value? Doubt will come na. They have given directly in the question in exam. If they don't give, what is my situation? Then I will be at risk na, sir? No, you will not be at risk. I will tell you why. Z value is how much? Z value is how much? 1.645. 1.645. See, in a table, if you put it, this is a standard normal distribution table. Okay, always remember, VaR calculation means we are calculating the amount of loss. Amount of loss means mean will be there, above mean will be higher returns that we are going to get, right side. Okay, always remember, VaR concept means standard normal table la answer will be always on the extreme left side. Okay, because left side is non-happening, right side is the happening of event. Value at risk means what? I am going to get the loss. Okay, for example, mean is 100 rupees. Anything beyond 100 will come on the right side of the table. Anything lesser than 100 will come on the left side of the table. We are doing value at risk. Value at risk is a loss amount, it's not a profit amount. Therefore, never VaR question comes in examination, you should concentrate on right side. You should concentrate only on the left side of the standard normal table. It is common sense that one should have before doing the VaR questions. Okay, so now listen what they said. 95% confidence level. Let us understand what is this confidence level. 95% confidence level means I am 95% sure. I am what? 95% sure that my loss in a day, because the question is given on daily basis, my loss on a particular trading day will not go beyond a particular VaR value. Sir, what is that VaR value? Are we have to calculate. If that is also given, why you have to do value at risk chapter? So they are asking, if you are 95% confident, if you are 95% confident that a loss will not go beyond a particular number, tell what is that number. Tell what is that number. Listen, I will give you one threshold understanding for this. Okay, what understanding? Common sense understanding. See, you wrote exam and came, some exam. Okay, you wrote some exam and came. I asked you, how many marks you will get? You said I will get 80. You said I will get 80. Okay, means getting 80 can also be understood as losing 20, because exam is for 100. So I asked like this, how much you will get? You said I will get 80. I then asked you, what is the probability that you will get 80 marks? Then you immediately said that probability, probability 90% you said. Means what does it mean? There is 10% chance. There is 10% chance that you will get less than 80. That you will get less than 80. Or your losing marks can be more than 20. Your losing marks can be more than 20. Your getting beyond 80 is not possible in 10% of the cases. Means normally you are expecting 80. Okay, I asked what is the probability of that 80. You said 90%. Until there is a 10% chance that you may not get that 80, you may get less than 80. Or you may not lose just 20, you may lose more than 20. Correct or not? So the point is, what is that risk value? Immediately, next question I will ask. Listen, I asked you the question, how much you will get? You said I will get 80. You said I will get 80 marks. I said what is the probability? What is the probability that you will get 80? Then you said probability, probability is 90%. Probability is 90%. Now listen to the changed question now. I asked another question. Okay, 80 marks ki probability is 90%. Then I asked the question, what is the probability of you getting, I repeat, what is the probability of you getting 90 marks? Do you understand the question? What is the probability of you getting 90 marks? Immediately you said, probability of me getting 90 marks, probability of me getting 90 marks is 70%, you said. Okay, or 60% you said. From this what you understood? From this what you understood? If you wanted to reduce the VaR, if you wanted to reduce the VaR, the probability of occurrence will decrease. Simply to tell, I will explain you this way. 80 marks ki probability is 90%. Okay, 90 marks ki probability is not 100%. It will become 60% only. 60 or 70 or 75, some percentage will happen. Means as and when you wanted to reduce your loss, okay, VaR value if you wanted to reduce, probability also will simultaneously get reduced. This is what we are going to understand by doing a question and answer. Then you can understand more practically. Listen carefully. In this case what happened? See, portfolio value 100 crore. You invested 100 crore. Daily standard deviation is 2%. Standard deviation is 2%. What do you mean standard deviation is 2%? Change in the market can happen, volatility. Prices will go up and down by 2%. Okay. Calculate the VaR at 95% confidence level. Z value 1.645. How they might have got this Z table? Z table will be there, na? In the table they plotted the numbers. Okay. Okay. Now VaR equal to formula, mean minus Z into standard deviation. Mean minus Z into standard deviation. This is the formula for what? This is the formula for VaR. So always remember, VaR equal to mean minus Z into standard deviation. Now mean, sir, mean not given in the question. If mean is not given in the question, it will be assumed to be 0. It will be assumed to be 0. So mean is 0. Okay, anything above 0 comes here, anything below 0 will come here. Okay, now mean is 0, average return is 0. Okay, next, so mean is 0. 95% confidence level means 5% risk level, this part. Okay, now the question is, they have given Z value as 1.645. What is this 1.645? This is the Z value for mean to target number. Mean to target number. Mean to target number Z value they have given. Means from here till here the Z value is 1.645. 1.645. So tell me, VaR equal to how much? Mean 0 minus Z value is how much? 1.645 into standard deviation is how much? 2%. That comes to 2% means 0.02, na? So obviously that comes to 0.0329. 0.0329, also called as 3.29%. What is my total wealth? 100 into 3.29%, which comes to 3.29 crores. What does it mean? What is this 3.29? If you invest 100 crores in the market, if you invest 100 crores in the market, there is a 95% probability. There is a 95% probability on a one particular day. That day can be any day. On a one particular day, okay, there is a chance of loss exceeding even 3.29%. Means, see, you enter into market. Okay, you ask your friend, I wanted to invest in the market. Okay, I will invest 100 crore. Tell me what is the worst loss that I can get. Okay, tell me the worst loss that I can get. Then he asked, tell me the probability. Then I will tell. You said at 5% probability, what will be my VaR? Then he will tell 95% there is a chance. How much? 95% there is a chance that your loss on a particular day will not go beyond 3.929 crores. However, there is a 5% chance that your loss can even go beyond 3.29 crores. That is the meaning of VaR. So VaR can be calculated either this way, or VaR can also be calculated as wealth. What is it? Wealth. This is another formula. Wealth into Z into standard deviation. VaR is a loss value, na? So they will put minus here. So how much? 100 crore into Z value. How much? 1.645 into standard deviation. How much? 2% or 0.02. 0.02. So 1.645 into 0.02 into 100 crores. Then also how much will come? 3.29 crores. Okay. Everyone, did you understand the point clearly? Yeah? See, next question. Next question. Facts. Portfolio value invested 100 crore. Daily VaR is 2%. Calculate VaR at 99% confidence level. Z value is 2.326. 2.326. Okay. 99% confidence level they have given. Nothing is said in the question. Z is assumed to be mean to target number. Mean to target table. See, if anyone in the class is getting a doubt, sir, how come he got the 2.326 or something is there? Na? How he got? See, this table they will take. Example, they will give some part of this table. See here. Listen. Again, doubt should not come after this. Okay? See. What is the probability we have? What is the probability? 95% target. 95% probability. In this question, 99% probable. Correct? See. Standard table. Okay? Mean 5%, 45%. Correct? 1.645, some number. What is the number here? Question, I forgot the number what they have given. 2.326. How they got that answer? Let me explain. 2.326. 2.326. They given in the question. If they don't give, and if in the exam this is given, how to solve? I will tell you. See there. Standard normal table. Forget about my accuracy in diagram. Now concept is important. 5%, 45%, totally this side 50, this side 50. We are talking about VaR. Right side irrelevant. Mean to target number. Mean to target number. Target number is how much? 95% 95% confident. Okay, 95% confident means in that 95 right side will take 50. So balance is how much? 45. So we want Z value for 45% probability. 45 means how much? 0.45. This is mean to target table. Okay. See, let us check where 0.45% is located. See here. Okay. If it is 99%, na, 49% we will take. Here only 1% we will take. That also I will round off. 0.49. 0.49 is between these two. Okay. 2.3 2.32 2.33. Okay. So how to understand? 2.32 2.33. 2.32 value is 0.4898. 2.33 value is 0.4901. But we don't want 0.4998 and 0.4901. We want 0.49 only. In this case, what is the difference? 0.0002. In this case 0.0001. For 0.01 value, z value change, this value is changing by 0.0003. So if 0.01 ki 0.0003 change is there, for 0.0002 ki how much change has to come? How much change has to come? Calculate. 0.0002 into 0.01 divided by 0.0003. How much? 0.0067. 0.0067. This is to be added to 2.32 plus 2.32 plus 2.32. How much? 2.326 or 2.327. Like that, they got this 2.326. It is not a magical game. Just you need to understand. If people don't have a clarity, they will mug up these numbers. A fool only will mug up these numbers. Yeah, know how the numbers came, then confidence will be there for you. Your confidence level will be 100% then in exam. No VaR for you. Sir, anyway, I told my duty is discharged. Okay. Now listen. He is asking us to calculate VaR. Okay. First let us calculate. He is asking VaR for 10 days. Means if I am in the market for 10 days, what is my VaR? He is asking. First calculate daily VaR and then what to do, let us decide. So VaR equal to minus wealth into Z into standard deviation. How much you are investing? 100 crore. Z value is how much? 2.326 into standard deviation of how much? 2%. How much? 4. How much it is? 4.652. So 4.652 crores. This is for 1 day. This is for 1 day. For 10 days into 10. Wrong. You should never multiply with days because every day you won't get this loss. Okay. This is a daily loss. This is a daily VaR. Not everyday VaR. 1 day it can happen. So whenever you multiply, there is a correlation that exists. I don't want to explain all those things now and waste your time. Therefore, whenever you want 10 days VaR, nothing. Easy. Daily VaR into root of time. Daily VaR into root of time. So daily VaR 4.652 crore into root of time, that equal to 14.71 crore. This value became 3.6162. So total. So 10 days VaR will be 14.71 crore at 99% confidence level. What do you mean by that? I am 99% sure. I am 99% sure that my loss will not go beyond 14.71 crore. But there is 1% chance. There is 1% chance that my loss over a period of 10 days can even go beyond 14.71 crore. Everybody understood the concept clearly or not? So next one. See, daily VaR is 12,500. Calculate. This is very practical. Very practical. Real life scenario la, so many mutual fund companies are also doing this. Calculate weekly, monthly, semi-annual and annual VaR. Okay. See, sir, weekly means 7 days. No, I am talking about trading weekdays. Trading weekdays. How many trading weekdays will be there? Totally 5 in a week, 20 in a month, 125 in a half yearly, 250 days in a year. If exam question differently they gave, for example, instead of 250, they have given 252. Don't argue with the question paper then. It should be only 250. Who gave you 252? Your grandfather. Don't ask questions. Understood? 250 means 250 you take. 252 means 252 you take. 263 means 263 you take. Don't argue with the examiner. If nothing is given, these are the convention. That's why conventionally I have written. Means normally, traditionally, this is the number. But if they give separately another number, now follow that. Okay. So, what is a daily VaR? 12,500. He is asking us to calculate weekly, monthly, semi-annually and annually. See, weekly means what? Into root 5. Monthly means what? Root 20. 6 monthly, root 125. This is how it will be done. Answer is over. Understood, everyone? Hey. Everyone understood the concept, huh? Okay, that's it. Next, see how fast it will be completed. Just some amount of knowledge. See here, portfolio value 100 crore, annual return 20%, standard deviation 30%, calculate daily VaR at 95% confidence level. 95% confidence level, Z value is how much? 1.6. How they got? Table again. They went to the table. 95% confidence level means 95% la 50% you leave at the other side. 45% you have to take. 45 means 0.45. Table la 0.45 in what two numbers middle they will take. They will calculate Z value 1.645 got done. Calculate daily return. So what he is asking? Daily VaR. Daily VaR. Sir, why we are calculating daily return, sir? Please explain me first why. What is the reason? Reason is they didn't give mean. They didn't give mean. So when mean is not given, how to do? See, calculation of daily return. Okay, daily return means what? Annual return divided by 250 days. Okay, 0.08% per day. Daily standard deviation 30% divided by root of 250. Okay, not 250. Whenever risk na standard deviation, root has to come. Logics, everything, regular classes in CA final, not now. This is not the time. This is a main ideology that you need to understand. If a practical scenario comes, you joined a company, they ask you to calculate. You are writing NISM exams, you are writing some CFA exams, you are writing CA final exams. Okay, when you open that, when you wanted to solve, this is how it will be solved. So annual standard deviation divided by root of 250, you got 1.90 per day. So this is the daily standard deviation. This is the daily return. Daily return. This daily return is 1 day return, 250 days return divided by 250. 250 days, 20% it will come divided by 250. This is the average. That's why this is the mean. They did not give, they gave annual return. We calculated on an average per day. This is the mean. So mean is 0.08%. Standard deviation, Z value already they have given. Standard deviation we have minus 3.05. Okay, next. How much I invested? 100 crore into 3.05, 3.5 crore at 95% confidence level. Next. See here. Facts. Portfolio value. I'm not now investing in one asset. I'm investing in two assets. What are those? Asset A and asset B. Asset A 10 lakh, asset B 10 lakh. Daily standard deviation is 0.1. Correlation of A and B is 0.3. What 5-day VaR? What is the 5-day VaR at 95% confidence level? Okay, 95% confidence level. Understand? Very easy. First, to calculate VaR, what is the requirement? First, tell me that. We require mean, we require Z, we require standard deviation. Correct? We require mean, we require standard deviation, we require Z value. Z value 95% confidence level. Z value we already know. Correct? 1.645. Yes or no? Now, what we have to do? First, we have to calculate the portfolio standard deviation. Portfolio standard deviation. Mean also you don't need, because what is the formula? Wealth into Z into standard deviation minus wealth. So wealth you have already. You invested 10 lakh in one asset, 10 lakh in another asset. Correct? Like that you invested. Wealth we have. Z value we have. Standard deviation we have to calculate. Standard deviation of A na, B na, both together as a portfolio na. Both together as a portfolio. See, standard deviation of a portfolio is calculated using a formula. This has 1 hour discussion in CA final. I'm not going to put that. Just to remember. Wx square sigma x square wy square sigma y square plus 2wx wy sigma x sigma y correlation of xy. Not that great formula, a plus b whole square with a correlation root of. Wx means amount, weight of a. X means here a. 20 lakhs la 10 lakhs is a. 0.5 square into standard deviation of a 0.1 square, because both A and B it is this, and percentage invested is 50-50, plus 2 into Wx Wy sigma x, sigma y. What is the correlation? 0.3. Okay. Okay. Now, once you solve this, you will get the answer this way. Okay. I'm not going to solve all those things and waste your time now. So, final answer is 0.0806%. What is this? This is the standard deviation. This is what a standard deviation. Daily standard deviation. He asked for 5-day. First, let us calculate daily VaR. Daily VaR into Z into standard deviation. How much you are investing? How much you are investing? 20 lakh into 1.645 into standard deviation 0.0806. See, 2651.74 into root of 5. 5929 is the 5-day VaR. Everybody, please tell me, did you all understand how the valuation has to be done? Next one. See, other kind of practical questions also let us do. Now listen carefully. Mean return is 2 crore. Amounts they have given, not in percentage. Standard deviation 1.6 crore. Maximum tolerable loss 1 crore. Here VaR is given. Maximum tolerable loss he has given. Okay. What we have to tell? What is the probability we have to calculate now? Understood the point or not? So therefore, try to understand clearly. He is asking us to calculate the probability. Because already VaR value they have only given. What is the loss? 1 crore is the VaR. What is the probability that loss is within 1 crore? What is the probability that it should be more than 1 crore is what we have to tell. Okay. Probability beyond VaR, probability within VaR is what we have to calculate. VaR already given 1 crore. Okay. See. Now listen carefully. These are technically difficult areas. First, Z value has to be calculated. Z value has to be calculated. Z value means what? X minus X bar divided by sigma. X minus X bar divided by sigma. Okay. What is X? Target number. Okay. Target number. How much? 1 crore is my target. Okay. 1 crore loss is my target. What is the mean? 2 crore. Divided by sigma 1.6 crore. So that's what we have done here. Minus, because 1 is not 1, 1 is minus 1. It's a loss number. So minus 1 minus 2. Totally how much? Minus 3 divided by 1.6. It is 1.875. 1.875. See, Z value came to how much? Minus 1.875 loss, or Z value is 1.875 on VaR. VaR itself means a negative number. Again, you need not write negative. So VaR of Z is 1.875. 1.875. Now, see, we will draw a table. Okay, we will draw a table. Now listen. Please listen carefully. He is asking like this. There is a table. Till now in all the questions what we have done, already they said my confidence is 95, my confidence is 100, my confidence is 70. Some number they will give. Here he did not give. He said like this. Mean is 2 crore. Average return will be 2 crore. Okay, average return will be 2 crore. Generally my loss expected is 1 crore. What is the probability that I will get more than 2 crore? 50%, which I don't want in VaR calculation. I always see VaR on left side. Okay, non-happening is the VaR. Okay, now listen. Totally, this area probability will be 50%. This area has some X probability, this has some Y probability. He is asking what is this X and Y. He is asking this value to be calculated. Are you clear? Are you clear? Now see, what we have to do? 1.875 is the value. 1.875 is the value. First, this is mean to target table. Mean to target table. How much we got? 1.875. 1.875. So listen. Where is this? I will go back to the table. See here. See. Observation please. Z value 1.8. Okay, 1.8. 7. Okay, 1.875. 1.875 is between 1.87 and 1.88. This number, here itself I will solve. See, at Z value 1.87, 1.88, 1.87 it is 0.4693, 0.4699, 0.01 change, 0.0006. We want, okay, we want 1.87 value na, 1.87. So 1.87 ki we want this value, 1.88 ki we want this value. From here, instead of doing on calculator, I will directly show and save your time. Okay, calculations I told now how to be done. See here, same. At 1.87 it is 0.4693. 1.88 it is 0.4699. This is a value. For 0.01, okay, for 0.01 it is 0.0006 change. Okay, we want 1.87, we want 1.88, we want 1.875, 1.875, 1.875 means we want a difference of 0.0005, 0.005. So for that it is 0.0003. So 1.87, 1.875 means 0.0003. Probability is how much? 0.4693 at 1.87 plus 0.0003. Totally it is 0.4696 or 46.96%. Means, try to understand clearly. Till now what we have done in the previous questions, till now what we have done is, they have given the probability of occurrence, we calculated VaR value. Now VaR value they have given, we calculated the probability of occurrence. Okay, see how to calculate probability of occurrence. See here, mean to target number. Mean is 2 crore, target number 1 crore, target number 1 crore. For that already we calculated Z value as 1.875, 1.875. Okay, so 1.875 is a value between, okay, 1.87 ki probability is 0.4693, 1.88 ki probability is 0.4699. Okay, for 0.01% change in Z value, probability changes by 0.0006. Okay, so but we want a probability of how, we want a value of how much? We don't want 1.87, we don't want 1.88, we want 1.875, 1.875. So it's exactly half of 0.0006. Half means how much? 0.0003. So 1.87 plus 1.87 probability is 0.4693 plus 0.0003, which came to 0.4696, which is also called as 46.96%. Next. So this is a question they asked. Probability of loss crossing 1 crore. Probability of loss crossing 1 crore. Probability on the left hand total is 0.5. In that, probability up to Z value, see, mean to Z value, mean to Z value, mean to Z value or mean to that particular loss value means how much? Up to 1 crore the probability is 46.96. Therefore, the balance is the probability that it can even go beyond go beyond 1 crore. How much probability is there? 3.04% probability is there. In 100 cases, 3 cases your loss can also be more than, okay, that 1 crore rupee. Next one, facts of the case. Wealth 2 crore, standard deviation 2%, number of days 252. Here they have given, don't argue, 252. Confidence level 99, score 2.33. Daily VaR. Daily VaR, how to calculate? Wealth minus wealth into Z into standard deviation. Minus wealth into Z. Okay, into 0.02. Okay, volatility of the portfolio. Portfolio value into standard deviation 4 lakh. So totally how much is the portfolio value invested? See, daily VaR, if you want to calculate now, directly you can calculate minus 2 crore into 2.33 into 2%. That's what I have given here. 2 crore into 2.33 into 2%, 9.32 lakhs. 10-day VaR into root 10, 29.47 lakhs. Everyone, did you understand the concept clearly? Next one. Investor is Mr. Neil. Wealth 1 crore, standard deviation 2% per day, confidence level 99. Okay, maximum loss for 1 day. And VaR for 1 day and VaR for 10 days. How to calculate? VaR equal to minus wealth into Z into standard deviation. Minus wealth 1 crore into Z 2.33 into standard deviation 0.02. 4.66 lakhs. 10 day into root 10. Answer over. Understood? Same. Previously one question we have done a portfolio. Same. There 100 we have done. Here 200 we have to do. Remaining everything is essentially the same. Okay. Nothing great. See here. Portfolio value $5 million. Daily standard deviation 1%. Calculate VaR for 10 days and 99% confidence level. See, portfolio value they have given. Daily standard deviation they have given. Calculate the VaR. VaR means same. Wealth 5 million into Z 2.33 into 1%. Daily VaR. Okay. 10 days VaR means root 10. 3.33 lakh $68,405. Same. 7th also same. Same concept. Okay. Next, standard deviation per annum 7.5 lakh, return per annum average 24 lakh, confidence level 95%, 1.65. VaR for 1 year, VaR for 6 months. 1 year VaR. Mean minus formula. Mean minus Z into standard deviation. Mean is already given 24 lakh. Average, he has only given mean minus Z value 1.65. They have only given into standard deviation. You multiply, you will get 1 year VaR. 1 year into 1 year VaR, you got root t, though you multiply, you will get the VaR for 6 years. Okay, 6 years. So root 6, obviously it is 28 lakh 47,532. That's it. These are all the various types of questions that one should understand within the topic called as value at risk.